No, we took a hit. We were at 20, and then it grew up to 23%. Then it went down to 16% of the portfolio. I mean, it was really volatile. But I've always said you're going to get this volatility in an ASN industry that's not regulated because there's no institutional bid. So probably at the low, we were at 15%. We lost, 40% of the value. And now we've come back up on some projects, and they haven't all come back at the same pace. The big players, the big market cap names like Bitcoin, like Ethereum, like Solana, like Polygon, HBAR, in some cases we doubled down. We took advantage of the extreme volatility in the large cap names like ETH and like Bitcoin. Why not add to the position if you're going to stay long? But, everybody trying to manage this space, I don't care who you are. If you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up. If you'd own these positions for more than 2 years, you're basically in a break-even situation. So this asset class is not correlated with anything, as people thought. It's not correlated with inflation yet, but the real problem, and every time you and I talk about this, it's really a gauge on where the institutional buyer is. And right now, zero. They have no Bitcoin. Anybody that tells you the institutions, the sovereigns own it is full of poo-poo.
Hello and welcome to Money Talks. In today's video, Shark Tank investor and popular businessman Kevin O'Leary, aka Mr. Wonderful, updates us about rising inflation, weakening economy, Fed's policies, and recession narrative. He also shares his thoughts about Bitcoin's most recent price action, his crypto allocation strategy, and his perspective about gold investment. Make sure to stick around till the end of this video, where Kevin O'Leary talks about the future path for the US dollar and the status of Bitcoin. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any more time, let's dive right into the video.
I see Bitcoin sort of testing 20,000 all the time, getting a lot of resistance there. Seems to be holding the 2023 area. Still very profitable for Bitcoin miners that are currently mining at about 7,000 per coin at scale. And so there has been a knee-jerk reaction against Bitcoin miners lately because of ESG concerns, but they're also self-correcting by getting into nuclear and hydropower, which is plentiful in some countries like Norway. Now, crypto itself desperately needs policy. It needs regulation. And there was a bill just 2 weeks ago that was contemplated being pushed through, not on Bitcoin, just stable coins as payment systems. And as you know, that's been a very volatile area. That bill, that initiative has been stalled till September, but I think there's a 50-50 chance that we will have policy on basically stable coins tied to the US dollar. And let me explain specifically why I think it's going to happen. There is a turf war going on between the SEC and every other regulator as regards to crypto, NFTs, tokens, all of this stuff. And so the smart regulators, the policymakers are saying, well, wait a second, let's pick one outcome. Let's just do payment systems, just like a credit card, a Visa card, or a money market fund, which has very, limited flexibility in terms of what you can hold in it, basically T-bills and dollar for dollar cash. Same thing with a payment system like a stable coin. If that policy comes down, let's say it gets done in September, that's a signal to the market that we're starting to break open the logjam on policy making. And I'm very, very optimistic. In fact, on August 3rd, I'll be addressing the bipartisan legislature in Colorado on specifically in Denver on this issue. Very rare to get all of the policymakers in one room, both sides of the aisle and their staff. This is what they want to talk about, the digital economy and policy on digital currency. I'm one of the people going there to address them. I'm very proud to be doing it. But the point is they want policy. We're finally getting something to happen here, I think.
With the price of Bitcoin holding above 22,000, more and more market players are turning bullish again. And does this mean that we could see Bitcoin go to 28,000 in the short term, or will it fall below its current levels? Let's hear what Kevin O'Leary has to say.
I'm in that camp that says King dollar is going to be stronger. Euro is going to probably, worst case, go to 80 cents. I mean, look, they've got lots of external issues there that we don't deal with here. They have the Putin factor, the energy factor, how screwed up Germany is in shutting down all its alternative power. They did that to themselves. That's a self-inflicted wound. The Ukraine, the grain situation, the market knows all these factors, but it doesn't give you confidence to stock up on euros. And, for me, the way I'm playing it is I'm buying the top 50 European names in their local currencies, in Swiss francs, in euros, and British pounds. Because if you look at a Nestle or you look at American Tobacco or a Roche, half their sales, in some cases more than half, are in the United States. And now you get to buy them in their local currency at massive discounts, PE discounts, and currency discounts. So why not take down a little bit of Europe? And I've increased that position for me specifically to 20% of the operating company's portfolio. European names, mega caps, big cash flowers, selling at huge discounts. Everybody hates the European zip code right now.
Following the collapse of Terra Luna and insolvencies of Celsius and Three Arrows Capital, Kevin shares from a business perspective, these companies should have been bailed out. Although Mr. O'Leary is a huge supporter of Bitcoin and cryptocurrencies, we've still not seen large institutional investors in the space yet. Kevin also talks about what needs to happen before large institutions enter the crypto market.
When are we going to hit peak inflation, Kevin? Have we?
Well, we haven't yet, particularly if this Build Back Better bill prints another $400 to $600 billion and flushes it right into the economy. That's probably not going to be a good outcome for inflation because it's very inflationary, even though it's trying to be labeled as an anti-inflation bill. Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now because it's never happened before. You've got a situation of full employment that's like 3.4%. And yet at the same time, a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours. Maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been job owning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here. So he's data dependent. We've never seen this before. Never in the history of the economy in 200 plus years has this ever occurred. So again, another sign that is not fitting with what everybody wants towards this recession, maybe.
O'Leary also said that his crypto portfolio suffered a double-digit drawdown, but he took that as an opportunity to buy the dip. We took a hit. We were at 20% of the portfolio, and then it grew up to 23%. Then it went down to 16% of the portfolio. It was really volatile, but I've always said you're going to get this volatility in an industry that's not regulated because there's no institutional bid. So probably at the low, we were at 15%. We lost 40% of the value, and now we've come back up on some projects. And they haven't all come back at the same pace. According to the venture capitalist, the real problem facing crypto assets currently isn't the lack of institutional participation.
Well, the narrative towards the soft landing has changed so much in the last 8 weeks because just 2 months ago, nobody thought Powell could engineer anything like this. Yeah. And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody who thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside. And so it's impossible to time the market. You would have never guessed July would have been a good month, but it was. Well, the truth is in the earnings. And so far, everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies. And we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities because, as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 more million people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes, they all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know.
Exactly.
So my attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. And just wait and see what happens. My names are high quality names that provide cash flow and distributions. But it doesn't matter what sector you pick. You've been doing quite well in the last 4 weeks.
The famed Shark Tank investor also cut Robinhood from his portfolio because it's that part of the taint. He said, any name that falls under the cloud of crypto or non-regulated trading is going to be dead money for a while, O'Leary said. I might as well take my pain, take the loss, move on, and wait for this drama to play out in Washington, D.C., he said. O'Leary is optimistic that regulation will play out in the fall, but he expects Coinbase and Robinhood to be stuck in the mud until then. This stuff is coming, but I think these names are toxic waste until it's resolved, he said. So what do you think about Kevin's crypto allocation strategy? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thank you so much for watching.